Moderator Jonny, founder and director of Fintech Week Tel Aviv, presents a panel on True Financial Inclusion is not just an aspiration, it's our collective future.
Good afternoon. It's a pleasure to be here. My name is Jonny. I'm the founder and director of Fintech Week Tel Aviv, an annual Fintech Fest in Tel Aviv. It gives me great pleasure to be here and to have such esteemed panelists talking about a hugely important subject. So over the next 40 minutes, unfortunately we can't take Q&A from the audience, but over the next 40 minutes we're going to delve into the discussion around true financial inclusion. It's not just an aspiration, it is in our collective future. So before I introduce my esteemed panelists, I just want to look at a quick definition. Financial inclusion means a lot of things. So I'm just going to use the World Bank definition as a pivoting point. Financial inclusion means that individuals and businesses have access to useful and affordable financial products and services that meet their needs. Transactions, payments, savings, credit and insurance delivered in a responsible and sustainable way. I'd like to first introduce our panelists. If we can start with Guy on my immediate right. If you can please introduce yourself and your companies and what you do.
Sure.
Guy, thank you.
Hi everyone, my name is Guy Kashtan. I'm the co-founder and CEO of Rewire. At Rewire we provide financial services for migrants across Europe and Israel. We are licensed in both territories and we serve over 500,000 registered customers.
Lee?
Hello everyone, my name is Zeiad Idris and I am the co-founder and CEO of Algbra. We are a UK-based fintech that is focusing on values-based and socially conscious consumers in the UK and beyond.
And my name is Mariana Gospodinova. I'm the general manager for Europe at Crypto.com. We are a company that facilitates the adoption of cryptocurrencies across the world. We have a number of financial services licenses, as well as we have the first virtual financial asset services license issued by the MFSA. We don't have a single location. We have multiple offices across the world. I personally sit in Malta. But I do have colleagues all over the world with large offices in Hong Kong, in Singapore, in Sofia, Bulgaria, and many other locations.
So as you can see, we have a very diverse panelists here. And my first question is, obviously you heard the World Bank definition. What does financial inclusion mean for you? And we're going to go into post-pandemic, the recovery period. But if you can just give me an outline of what does it mean to you at the moment. Whoever wants to take that away, take it.
I can start. I think that the World Bank definition is great. I think one thing that it is missing is about the educational part of helping the populations who are either underbanked or underserved today use those services which you make accessible and build for them. Because if you just build it and make it accessible, it's not always enough. Because in many cases, this is the first time an underserved population would have access to such services, especially if you're looking at investment, savings. So payments is today broadly used. And then if you're making that accessible, it is fine. But when you go into more complicated services like credit, insurance, savings, in my opinion, the educational part and helping customers use it, incentivizing them to use it, to build a better future for themselves and their families, especially in the context of migrant workers, in my opinion, is a critical part of financial inclusion.
Thank you, Guy. I agree with Guy as well. And I think in particular, I'd focus on the part that in the World Bank definition, focusing on fits the customer's needs. And there are a lot of financial services out there. There are a lot of solutions. But I think it's important that we actually provide products and services that actually fit consumers' needs. And I think, this is a journey. This is not something that can obviously happen overnight, but it's a recognition of understanding that there are a diversity of different needs out there and that the industry needs to react to the diversity of needs, whether it's migrant workers, whether it's, people who maybe have different kind of needs from the geographies they live in or their countries of origin and so on, but also maybe some values-based needs as well and some social needs as well. So That's, I think, also something that it's not just about the definition itself, it's about the execution around that.
Yeah, couldn't agree more with my co-panelists here, and definitely there isn't a single definition of financial inclusion, but what we have to look into is what is the availability of services and what is the quality of services provided. And unfortunately, the data that is being collected by different participants at large, by the World Bank, and then by central banks that are participating in this initiative is not sufficient and is not collected at a very often period of time, so that we have particularly information about the quality, let's say, of the services that are being offered to people who are not financially included at the moment. Of course, there is plenty more data when it comes to the availability of services, because the central banks in each country have pretty established reporting when it comes to what kind of services the subject persons in each country would provide, but they don't have enough information as to what kind of society, what layer, what fabric of the society are these services targeting. And this is something that we all need to work towards improving, definitely.
Yeah, absolutely. And we're a proud member of the Emerging Payments Association, and we're also involved very actively in something called Project Inclusion with the Emerging Payments Association. And one of the things that we've been discussing there and working on is the definitions actually of financial inclusion and financial exclusion for that fact. And one of the areas that was, let's say, overlooked, but we're happy that now this is being addressed, is faith-based requirements, because sometimes there are requirements that are not obvious ones out there, but faith. So in a sense that again, being able to develop products and services that actually meet people's needs, and migrants will have similar requirements.
Yeah, I think you had a great definition there. Financial products and services that are marketed as being for all are not financial products and services that are good for all. Is that right?
Yeah, definitely. Yeah. So they say that when you build a product, if the product is for everyone, then eventually it's for no one. And I think it is especially true when you're not part of the general population. So if you go to a bank and you're part of the general population, you get all of the services you need. But if you have specific needs, the bank doesn't specifically build things for you. And in my opinion, part of inclusion, and as you said before, and as you mentioned as well, when we build specifically, in our case, for blue-collar migrant workers, then the services may fit other populations as well. But if you are a migrant worker coming to our service, then everything there is for you. So it is accessible to you, it is tailored for your needs, we educate you on how to use those services.
Yeah.
No, clearly what the co-panelists have mentioned makes a lot of sense, and what I have seen happening as well when it comes to financial inclusion is very often people would have a basic payment account, let's say. Your company, I think, provides payment accounts and cards attached to these accounts, but very often people would not use those accounts, and 50%, the World Bank has done a survey in 2017 asking people who are unbanked right now, why are they unbanked? Why do they not open a financial services account? And 50% of the people that were asked mentioned that they don't have enough money to open an account. They don't even know what to do with it. And if we speak of people who are currently out of the workforce, if we speak about people who are a minority, women are very often underrepresented when it comes to inclusion in financial services. It's also the role of government, not just the companies, to facilitate education, to facilitate, if you wish, the central banks to facilitate price stability so that people can actually plan their longer futures, for companies to participate and cooperate with the central banks and offer different programs that are able to attract migrants and people who are underrepresented and people who live in far-flung parts of countries that typically would not be really underrepresented when it comes to financial services, but just some people don't have physical access to points where they can get accounts.
Yeah. That's really interesting, and I think what you're touching on there, Mariana, is really interesting. And I think also what Guy said in terms of maybe you might come from a minority that the bank is not interested in. You come from a specific segment. What's interesting about the segment that that we are focusing on is that actually we come from a very large group actually, and by the research that we've done, just extrapolating World Bank data, there's roughly 800 million unbanked Muslims across the planet, right? So that's not a small number. when you actually look at the most unbanked countries on the planet, you end up with Indonesia, you end up with Bangladesh, India, Pakistan, Turkey, Egypt, Nigeria. So, you know, the data kind of tells itself there. What's interesting is even in more developed markets like the UK, like the European Union, there are still significant populations of second generation, third generation Muslims that are still underserved. The reasons for that, you know, will be diverse and so on. But what I'm saying is that it's not only market segments that are small, that are uninteresting to banks. Sometimes they're overlooked or maybe misunderstood, so they're difficult for banks to get their head around. And that's where I think fintech can really come in, and services, whether it's like Rewire or, you know, crypto.com and so on, can actually help address some of these needs.
And what are the other obstacles while we're on this, while we're in this area? For the underserved and to use regular services, we talked in our prep call about providing proof of residency, for example, and how can alternative data fill in this gap?
That's a very good question. I'd like to start first here.
Please, yeah.
So, data that is being required from people to open financial services accounts is very often not available. And it's not, to some extent, it's not the fault of companies, right? Because we all have obligations as licensees. We have to request certain type of information, but there are ways to go around this. And first, it again starts with the government. And central banks or financial services regulators have to measure financial companies depending on the population that they service. Maybe in certain regions, a proof of address is something very ubiquitous and everybody has it, and we can electronically verify our address or have an EID if you wish, but there are certain populations, as you've mentioned, where proof of address is impossible to obtain. There are people who are not able to even obtain a birth certificate or an ID card. And in such instances, of course, the easiest thing to do is localize your service. But as we know, the biggest impediment of financial inclusion comes also with the difficulty of doing cross-border transactions, because we cannot be based in every single country where we want to operate. We want to do this cross-border. We want to sit in a particular country where our team is and offer every service that we have cross-border. But for this, we need the regulators to understand the level of services that we're providing and to take the so-called risk-based approach, which has been implemented for years now. However, it does not quite work and is still not less prescriptive. For example, from my point of view, where I stand, I'm regulated by the Malta Financial Services Authority, and although the fifth MLD is already implemented and we're supposed to have the risk-based approach, there's still a lot of prescription on how to verify people, for example. And I can see the real difficulty of migrants to produce all the necessary documentation, although the thresholds that unbanked people would go into are extremely low, and practically we don't have to worry that much about money laundering or the financing of terrorism that we're trying to prevent with this regulation.
I'd like to add that on the optimistic side, there are two main obstacles around regulation, the way I see it, for overlooked populations. One is face-to-face KYC, which until a few years ago was required almost for every financial services in many countries. And the second one is, as you said, proof of address. And I'm happy to say that in most countries, both of these have either already changed or in the process of changing, led a lot by the European activities, and many countries are following that. When we look at the global expansion for Rewire, we look at countries where either have already made this change or are in the process of making this change, because there's a huge difference in making services accessible when you can make them accessible digitally to either overlooked populations or populations that are far from center cities, or populations that can't really provide the same documents as others. So it is the onboarding part in a financial services company that is regulated with specific needs, as you said, is a critical part of making your service accessible. So on one hand, we choose the countries where we operate based on that, but on the other, we are also working to change some of the specific local regulations in the countries where we operate. I'll give you one example. In one of the countries where we operate today, there's a recent law that allows you to do eKYC. But it only allows you to do eKYC for the general population. So if you have a local ID, a local citizen ID, you can go through digital KYC. And if you don't, you can't. Now, to your previous comment, I think in this case, it's not because of a risk-based approach. It's because it is too small of a population to actually take the time to spend and define the specific regulation for them. So it starts from a risk-based approach, but then overlooking the smaller populations, and then working with the regulators we have managed in the past to create specific exemptions in order to also provide our customers, based on a risk-based approach, the same level of digital KYC or remove a requirement of proof of address.
Yeah, but definitely, but when we speak of digitization of the services, we also have to look at the distribution of internet access, for example, because in rural societies where internet may not be as ubiquitous as in large cities, it's also impossible for people to access digitized services.
Yeah, I think my co-panelists have brought up very interesting points on 2-3 levels, actually. One is, I think there are very exciting developments taking place in technology that will allow us to actually be able to capture more people and serve more people. One is digital KYC. Another one is decentralized finance. So the technology is emerging, but the issue is obviously not just the technology itself. I think it's also very important for us as the industry to work closely with the regulators. It's not about trying to kind of work around the regulations, if you see where I'm coming from. It's working with the regulators to ensure that the needs are met from a regulatory perspective. But then there's also, I think, regulators need to think smartly as well at the same time. And where am I coming from with that? Which is populations that are not served digitally and that are not included. So therefore, it's not just about financial inclusion, by the way, it's digital inclusion in this case as well. Then they're going to be forced to utilize cash instead and traditional hawala networks. So if these populations are not served, through a Rewire, an Algbra, or a Crypto.com and so on, then that would mean they're going to have to go into the gray area, and therefore you actually have no data on what's going on. So actually, from an AML perspective, from a KYC perspective, the regulator has a bigger problem on their hands. So actually trying to working for the industry to work with the regulators and for the regulators to also understand that decentralized finance, digital KYC, digital banking, global payments, there are ways actually where we can work together to actually improve. It's a win-win-win for everyone actually, in that sense.
Yeah, that's a very good point. Actually, one country that has done a tremendous work towards this is India. When they introduced the e-ID, the e-government ID, they were also paying people into payment accounts, digitally accessed payment accounts, and this actually decreased corruption, for example, by nearly 50% because funds were not misappropriated when it comes to cash payments. And then it also gave access of women and underrepresented minorities to payment accounts, which they could potentially use afterwards. But I think, Jonny, you've mentioned what are the obstacles, and one of the obstacles is not just providing the payment accounts, but also providing relevant means for people to use those accounts, because there are plenty of people who would have an account and they would never make a single transaction over the course of, let's say, 12 months, which makes those accounts inactive. And the reason why they can't use the accounts is either because the account is too expensive. If there is an account maintenance fee, for example, for a lot of the minorities, it's really impossible for them to maintain an account that comes with fees. Or if there are no relevant products attached to these accounts, if there is no credit or if there is no insurance that they may need, because it's not just about providing them, that's the basics, right? A payment account that you can execute transactions from, but then what are the additional services? How do you gain access to credit for you to improve your lifestyle and to make better life choices, or even to think about attaining higher education? You need to have access to credit, right? And this, at the moment, is also an initiative for the World Bank, where they are working with companies. Probably you may have similar initiative. We, for example, do, where you can provide credit to people who don't necessarily have credit history or any previous credit for what it's worth, and you should provide this credit at a price that people can afford, and not discriminating certain levels of the population just because of their lack of access to financial services.
That's down to alternative data as well. It's using data savvily as well. And financial and digital literacy is hugely important, and providing sustainable products and services as well. So the mindset needs to change really, and I think the pandemic obviously has done a lot for financial inclusion. It's really put fintech under the spotlight, and you know, and the accelerated digitalisation of the economy has given rise to new opportunities in the fintech sector, and we are, you know, fintech is seen as a force for good and under the spotlight now. What does the sector need to do now to grab this opportunity? The huge opportunity now for fintech to drive forward and really improve financial inclusion across the globe. What needs to be done?
Thanks, Jonny. It's not just, you know, I guess it's not just about the technology here,
exactly,
you know,
yeah.
and it's also about the approach that's taken. And what's interesting is, you know, as we've been focusing on this discussion as well, is it seems as if financial inclusion or financial exclusion is only an issue for maybe people who come from a lower income background or maybe have some issues, whether it's with IDs or whether it's, you know, proof of address or whether it's, you know, residencies and things like that. What's interesting is actually, you know, there's a phenomenon taking place just generally in banking, you know, in the verticalization of banking as well, which we kind of touched on earlier privately. And I think what you know, when you look at consumers today, there is very much a kind of a values-based approach and a consciousness of what you're consuming. So when it comes to, for example, Algebra's consumers, you know, for our customer, it's very important that, you know, their money is never custodied, lent, or invested in a way that has a negative impact on society. So that could be things from, you know, whether their money ever touches tobacco or whether it touches any other, you know, even environmentally polluting stocks. So that, therefore, sustainability and these things also become very important. So technology is a means to an end, but it's not the ends in itself, is kind of where I'm getting at. And sometimes broadening our understanding of why people might be excluded or underserved. And in many cases, you know, if we look at, as an example, you know, a customer base that I know very well is the British Muslim consumer base. You know, tend to be second or third generation. They tend to, you know, their GDP per capita is relatively the same, a bit more or a bit less, depending on kind of professions and backgrounds. But it doesn't mean that the current financial system is actually serving their requirements very well. So it's not just about technology, it's also about approach, is kind of where I'm coming at it.
I'd like to add that the way we have experienced the COVID-19 area is mainly around digitalization. And that is on two different areas. One is regulation. So regulators had to move really fast in order to create new regulation procedures. Banks have changed almost entirely how they handle during this time, especially around curfews where customers couldn't even reach the banks. So on one side, regulation became better on the digitalized part. Second, customers in many cases had no choice for the first time because the migrant population in our case is roughly 80% cash-based, which means that even if you do serve them online, at the end of the day, they need to go and deposit cash or withdraw cash. And COVID-19 is the first time where they couldn't get the option to do that. And when you don't have an option, but your family needs money on the other side, you find the right way to do what you need to do digitally. So this has been an area where we had to support and handhold a lot of our customers. We have doubled our support in about 2 months. In the first curfew, over a year ago now, because for the first time we had to help almost every second customer in our case to move from offline to online, especially in Europe where there's been multiple curfews around multiple countries. So again, it's around digitalization that is coming from both the companies and how they can help customers and the regulators side.
Yeah. I couldn't agree more with the digitization part. Frankly speaking, if we look at how the financial crisis in 2008 affected people who were underbanked or not included in the financial system, although some of them lost their jobs and they generally lost their faith in the financial system, they practically still managed to get out of this situation rather quickly. And SMEs, most of the SMEs, for example, the small businesses, they managed to survive. Whereas if we look at COVID, so many people lost their jobs because brick and mortar jobs practically could not operate when the countries got locked down. And then so many small businesses did not survive. And we're looking at large scale businesses that are going down right now. And obviously small merchants could not really sustain the COVID economy. And although people generally lost not only their savings, they lost their jobs, a lot of them nevertheless turned to digitization and education, and primarily educating themselves, maybe because they had more time by working from home or not working at all, to start looking at new alternatives. And all the government payments that have been issued to people during these COVID times, a lot of them, for example, have been used to purchase cryptocurrencies because this was something new that was emerging. And although the crypto industry, I have to say, first looks at people who are early adopters, and by the time you reach the laggard stage, you have passed through all fabrics of society, whereas in this case, COVID accelerated massively the adoption of cryptocurrencies, and people were not only using crypto technologies in centralized exchanges or in decentralized exchanges for that matter to invest their money, but also they looked into ways how to participate in a grander scheme into the economy, because you touched upon the decentralized technology earlier, and in DeFi, all the applications are permissionless, which means you don't have an ID, that's not a problem. They don't verify you to use those services because these are practically smart contracts. These are technologies that offer peer-to-peer transacting. So you can be borrowing or lending money or participating in so-called liquidity pools and making an interest out of your deposit into that liquidity pool, or just transact over DeFi without authenticating yourself. So no proof of residence, no ID. And while this is highly technological, so you need to be educated to use these services, it has still been available to a lot of people who, let's say, had internet, were able to watch YouTube videos how to participate in that economy, and did it. In our case, you've mentioned that you have doubled your support. On our side, our support is already tenfold to what it was before the pandemic, and the user base has grown exponentially. And it's, although the current market conditions are not great, it continues growing, which means that a lot of people has used this difficult time to maybe self-educate themselves, perhaps because of the trend of crypto, and because a lot of countries started adopting certain regulatory framework around this regime. But we have seen a real influx of users, and what I think should happen forward is we all should try to educate people more. We, for example, have this academy that exists on our website where you can watch videos and learn basic stuff from what is Bitcoin or blockchain to how to create a liquidity pool, for example. So everyone with the access to simple information can educate themselves how to recognize financial threats, for example, or how to invest.
Yeah, no, I think that's really interesting, and I think the work that you're doing around kind of the financial literacy and education piece is very good, because it's also about kind of broadening the actual levels of service and awareness, education around this piece. But I think one of the things that's really interesting is that's been highlighted in this discussion is how, let's look at the silver lining from the pandemic, is that digitization and financial and fintech financial technology is being prioritized. Actually, we've seen that here in the UK with the Khalifa review as well, and where in developed economies, obviously we've had financial technology for some years now actually, and we've had challenger banking and digital banking and so on and so forth. But I think also in emerging countries, what we've started to see is where it may have been for a central bank or a regulator, digitization, digital payments may have been a number 4 or 5 priority on their list. It's now suddenly a number 1 or 2 priority. So I think we have a lot to look forward to in that sense as well, in terms of where things are going. And I think in terms of around the use cases for DeFi, blockchain technologies and so on, I think these are also very exciting for whether it comes to remittances, whether it comes to lending, whether it comes to investing. There are so many exciting use cases in terms of what can be done. And I think, that's it. As you say, you've got customers who today are comfortable with that. But I think, there's going to be a journey as well where this becomes more mainstream over time. And, in terms of what we're building as well, ensuring that we are ahead of the curve on technology and where things are going. But also, again, taking back that values approach, I think it's also very important that whether it's from a regulatory perspective, whether it's from a technology perspective, we understand that we're actually serving people and people have needs. And I think, we're seeing this now. We recently conducted a lifestyle and values banking report alongside the EPA and MasterCard. And, it's amazing the number of services we're seeing it, whether it's on whether it's on a gender basis, providers such as Lucy in Singapore, or whether it's for the LGBT community with people like Daylight as well, or whether it's for the African American community. We're seeing players like Greenwood emerge. Algebra fits into that as well, where we're serving our minimum viable market being the Muslim community. So I think it's there are some really exciting things happening, and of course the pandemic has been terrible for so many reasons. We don't need to dwell on that, but I think it's hopefully the industry and the regulators, we can take the learnings from that and kind of really push ahead into this new chapter.
And of course, open banking has been integral to this, and some people say that embedded finance is open banking 2.0, and does that offer something new to the underserved at all? Embedded finance?
I can say that we have been, in a way, touching open banking since before it was the law across Europe, through companies like Klarna and so forth and others. Open banking makes your bank accessible to other companies in this case. And since you don't, as an underserved or underbanked population, you don't always handle your banks the same way as others. So getting other companies to help you manage your finances, or getting access to your account, to your identification, to initiate a payment on your behalf, to migrate from one bank to another, those are critical parts of both encouraging competition and creating services that are more accessible and affordable to our customer bases. So in our case, it is a critical leapfrog of technology to make banking accessible to our customers.
I think it's a great next step for finance generally and for financial technology, because it increases competition, and it means that customers will have more choice. So what we're seeing now is, whether it's rideshare companies, whether it's delivery companies, they're starting to embed obviously financial services. Open banking is obviously one side where banks are now having to, by regulation, open up data and open up access to other financial service providers, and I think that's something really great. It eases migration potentially, or it eases kind of it creates more competition in the market as well, and gives consumers more options. And you might be banking with a bricks and mortar bank, but you might find that you want a particular service from another provider. And I think open banking and whether it's embedded finance or even open finance as well, kind of as a next phase, because it's not just about payments, it's not just about banking, it's also about insurance, it's also about investments. It's an entire ecosystem of let's say financial services that I think that where embedded finance, open banking, open finance is going to be able to help in that area.
No, definitely. And when we speak of open banking, obviously, it so just relates to European banks and European companies, because this is driven from the European Commission legislation. However, you've mentioned something very important, that it's not just the banks that can offer services, but embedded finance opens up opportunities to a larger range of companies to offer their services in the financial services area. And one type of companies that have to be mentioned here is the telecoms that have been providing financial services in sub-Saharan regions in Africa, and also they have expanded to some extent to West Africa as well, because in these regions, mobile money is actually more popular than opening bank accounts. And we, for example, have been trying to set up partnerships with such companies so that people can have access both to blockchain technology and, let's say, to cryptocurrencies, but also the ability to take fiat in and out through mobile money, because I think it was around 21% of the population of the sub-Saharan Africa is actually having access to mobile money accounts. And these mobile money accounts have lower levels of requirements when it comes to accessibility. And people generally have mobile phones in Africa. And it's extremely popular to actually transact and send money in and out using your mobile phone rather than using any kind of more modern financial services.
Yeah, I think it's really interesting what telco providers have done with mobile money accounts. I think in a lot of emerging countries and in sub-Saharan Africa in particular. I think it's to some extent it's now becoming already age technology. But what's interesting as well, it's that it's the telcos that have disrupted the banks in some of these regions. But I think there's even a next stage to this, and I think actually where decentralized finance will come in. And what we tend to see is I think that a lot of mobile money providers are kind of focusing around micropayments, and they're not really going to be able to fill the full gamut of requirements, whether it's cross-border transfers, whether it's other banking services, although I'm sure the telcos would love to get into those areas too. But we do have to move on as well.
I mean, amazingly, we've only got 4 minutes left. I don't know where the time has gone. We could actually spend all day talking about this. We're happy to if you want us to. But I think if we use these 4 minutes, if we just go down the panel and each of you summarise and add any last thought, comment you want to add. If you want to start with Guy.
Happy to start. For us, it is about what's coming next, both with open banking, digitalization, and how do we continue to make services accessible and financial inclusion. And the way we see today, we understand that when you serve migrants, money transfer may be the important part and why they migrate to support their families, but it's only a small piece of their financial journey. Today, we're working to create financial services from the point where they migrate until the point where they migrate back home. And then touching upon credit, insurances, long-term open banking is an important part of that. We mentioned before that migrants don't have credit history at all. Open banking helps bring this data in, providing them with free accounts, as Mariana mentioned before, which we do. Allows them to be banked with us, even if they can't afford banking with other places, which over time creates the data that we need in order to provide them with the services they need as the main financiers of their families, from insurances to credit to payments. This is where we are taking financial inclusion with migrants. It's been an exciting journey for the last 6 years, and we are continuing to take it forward now, expanding both globally on one hand, but also in terms of our product suite.
Fantastic.
No, I think the discussion has been very interesting, and I think for us it's about ensuring that we combine the best of all of the different approaches, whether it's technology, regulation, and ensuring that our customers' needs are met on every single level. And I think this is kind of the next, the next stage in financial services as well, kind of taking that values-based approach. And I think one of the exciting things that's happening is the recognition by regulators to fill this gap, the emergence of the technology as well to fill this gap. So it's about combining these together and ensuring that we as an industry work together, whether it's through open finance or whether it's through various different levels of collaboration, to be able to make sure that we meet the needs of all the different types of the financially excluded groups. And I think another thing to recognize that not everyone in that group actually is necessarily kind of coming from a lower income background. And that's why we say, there's really an opportunity to level the playing field or balance the equation on a number of different levels here.
Fantastic. Thank you very much. We have about a minute now.
Sure. Well, definitely a very insightful conversation. I couldn't be more thankful to be participating. For us, we have been working really hard to actually include everyone into the financial services economy through a new digitized way. And we believe that everyone can have access to financial services, but also can have full control of their data, of their identity and their money. And that can happen through decentralized technologies and through blockchain technologies overall. And we have been working also with regulators, with governments, and with partnering companies to educate people how to do that, how to access the financial system and still maintain control of their data and their money.
Thank you very much. We're almost out of time. I just want to thank very much our esteemed panelists, Guy, Zeiad and Mariana. It's been thoroughly enjoyable. It's been a pleasure moderating this panel. Financial inclusion underpins fintech, and I think we're in safe hands if these are our thought leaders. Thank you very much for joining us at home. Hope you enjoyed it. Hope it's put your mind off the football, and we look forward to doing this in person. Thank you very much, guys.
Thank you, Jonny.
Thank you.
We'll see you soon. Thank you.